Good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar 737 YouTube video, baby. Yeah. 737 YouTube videos that are geared to help teach you the art of technical analysis. Traders, as we know, the art of technical analysis doesn't work every single time you apply it in every situation. So futures trading is risky and can cause substantial financial loss. For instance, if you OMNI and you traders out there didn't have a sell stop in on Wednesday, you would have had your head handed to you in the S&P. Thank God for sell stop. That's all I can say about yesterday's trading. If we didn't have stops in, boy, oh boy, would it have hurt. We did have stops in. That is part of this game. Traders, in yesterday's video, last night's video, I put a chart up in front of you and said, this looks like an analyst's dream. And I don't care what anybody says. You look at that chart from Monday night into Tuesday into Wednesday, and that's exactly what it looks like. Now, the markets tumbled on Wednesday out of nowhere. They just came rolling down. There's no real new news out there that would have gotten released to push us down. So basically, I'm assuming that maybe some of the economic figures that were in the papers this weekend before the holiday, maybe people finally started reacting to them, and I want to talk about that, so let's get moving. This video is being filmed on Wednesday night for Trading Thursday. That would be June 2nd, 2011. Traders, the bullish trend is still intact in U.S. indices, and you must be aware of that. Economic recoveries do not go straight up, and let's talk about that for a moment. I'm a person that reads all the financial magazines and newspapers that are out there every weekend. I like to read a stack of them and see what the street is thinking. We all know what they're thinking on television every day, but that's pure panic news, and who cares about that? The newspapers will put in some articles that will at least show you what reports have come out in the past, what reports have come out recently, and what we're looking for going forward. That's the stuff I like to key in on in the newspapers. I will say this, literally since 2009, almost every week you can count on those newspapers showing economic figures are moving better and better. Not every month was perfect, but for the most part we moved higher. Now, in an economic recovery, not every month is going to produce rosy figures. And this month's figures, or what were released last month, we're now in June, what came out at the end of May, has people worried. Oh my God, is this a new recession? Is this the beginning of a crash? Traders, nothing goes straight up. Not a recovery, not a market, not a bull market. Nothing just goes straight up. So there's turbulence in a market when it's moving along towards the upside, just like there will be turbulence in our economic figures. Now, 1 month of not so rosy economic figures does not make a bear market, does not make an economic crash, does not mean we're going into a recession. If you get 3 or 4 months in a row, well then, hey, maybe we can revisit this. But I want you to recognize that, of course, there will be months that the news isn't perfect. Now, you do have the summer coming. You're going to get a lot of summer help hired. Those figures are going to show up in what the government releases in the reports. You will see a lot of activity this summer, and probably the reports next month will look better. We'll deal with those when they come out. My point behind this speech is this. I had people in my chat rooms today and all over the internet talking about the end of the world. The U.S. is broke. This is the beginning of the end. I've been bearish since 2009. I knew it was coming. You guys are insane. You can't be bearish since 2009. And if it starts to drop in the middle of 2011, you go, told you so. That's not how this game works. You got to be on it. You got to call it every day. You got to be in the market. You got to get yourselves back out if you are somebody who's not trading a fund and is day trading. But you cannot stand there and say, I knew this was coming after rallying since March of 2009. You know what I'm saying? So you guys have to stay in tune. That brings me to my next point. Focus on the big picture, not a one-day drop. Come on, guys. Be professional about this out there. Don't start ripping your hair out on a one-day pullback, even a two-day pullback. That is part of the game. So for you naysayers that are out there screaming this is the end of the world, you were wrong in '08, even though we had a major crash. It wasn't the end of the world. Don't you see that you are wrong now? Yes, we may come off a little bit. That doesn't mean it's the end of the economy as we know it. So relax out there, traders. Use your charts and focus on the bigger picture. Weekly and monthly charts will show you that right now, at this point in time, on this date right here, the bullish trend is still intact, and you must behave like it is. If that changes, we are very flexible, and we will change immediately. If we become bears and have to go bearish, that is what we will do. If we need to go short today, Thursday, we will do that. We're going to take a neutral approach at the onset of trading for the S&P for Thursday, but then we will set ourselves up. If it calls for getting short, we will do that. If we dip far enough where it looks like we can buy, we will do that. Omni's got levels where it will certainly sell if we rally first, and it's got levels where it will buy if the setup comes. So we'll see what the Omni wants to do. Take a look at your grain markets and your other commodity markets, and what you may notice is that the CRB index looks like it is heading down right now. Technically, fundamentally, CRB index moving lower. That means commodities should start to pull back, and some of them are showing that on the charts, and I think wheat may be one of those. So take a look at your wheat charts. Traders, I want to show you charts. When you get done looking at these charts, please give me a call if you'd like, 702-629-4755, or better than that, join me in my trading rooms where you will find me. In fact, today, more than ever, people showed up more than I've seen in the last couple of weeks. We had a big down day. The Bears come out of the woodwork. It's incredible. You got to love it. So, hey, Bears, I'll be there to babysit you and try to keep you in check if you want to show up again tomorrow, all right? We may go down, but we're not in a bear market yet. So, little at a time, guys. Let's cross that bridge when we get to it. However, I wanted to show you some charts. So take a look at these charts right here. The Dow Jones Transportation Average, but this is a daily bar. Now, here's what's interesting. We've been bullish, a little downturn, bullish, a little bit of sideways to down consolidation. Then we have a one-day spike. This day right here, every bear on the planet comes out of the woodwork and talks about the end of the world. Traders, how about we look at the larger picture? Look at this thing go all the way up to here. We are not in a bear market yet. So, yes, you can say, well, that was a bearish day on Wednesday, but you don't have to call for the end of the world just yet, traders. Not yet. You bears, I will say this, like a good broken clock, every now and then you're going to be right? So if you just keep talking about the bear market, sooner or later you'll be right. You just keep calling for it. The rest of us are going to trade technical analysis and actually trade what's on the chart and not what we hope for. Let's look at the next one. All right, traders, look at this. Now, when I say you got to go out to the weekly and the monthly to really see the picture, here is the transportation average on a weekly bar. Down here is the low of all lows, which would be March of 2009. We have been in a wonderful bull market, very nice parallel channel on the weekly bar. Another parallel channel, slightly steeper, is building. We have not violated the channel yet. That is not the look of a bearish market when you want to take a look at the big picture. This is a weekly bar. Each one of these green lines represents an entire week's worth of trading. Since 2009, March of '09, we've basically gone straight up with slight pullbacks. I think that we're still in a bull market for now. Traders, if we get under here and settle for a couple of weeks, then we may have a problem. Until then, we are in a bull market, acting like a bull market. That's on the weekly. Now, if we take this out a little further and look at the monthly, traders, once again, this is March 2009. That monthly chart does not look bearish by any means. It looks like a market that's ran up, had a breather, has run up, maybe taken a breather, or may just continue to run higher. Now, you can look back here and call this a possible double top. However, you already had a top here, had a massive drop, went up there again. That would be your double top. This would actually be a triple top. And we know we always buy through triple tops after a slight pullback. Another reason why, 1, 2, 3, why this may very well just be a slight pullback before the next major rally. Let's look at another chart here. E-mini S&P daily. Once again, traders, we just came out of this parallel channel, rallied up, had a one-day drop, back to the average, back to support. We have held the average. We have held support so far. Let's see where it goes before we label this thing a bear market, traders. For now, we are in a bull market, acting like a bull market does. It has pullbacks and rallies inside of its bull market. Again, we are day traders, and we are more than willing to flip to sellers if need be. But let's take this one day at a time. Now, when you want to look at the larger picture, here's the ES on a weekly bar chart. As you can see, again, each one of these green bars represents a week's worth of trading. Has been very bullish, has been working in the right direction, and doesn't look like it's ready to fall apart. If it does, it's got major support down here. So you may get to the 1270s, 1250s, if in fact we started to fall apart. But major support is waiting for it when it gets down there. Then traders, go look at the monthly. You want to really take a look at this. Keep the larger picture in focus. Look at the monthly ES, a wonderful channel. Look at how tight this channel's getting, and it's pointing close, more towards the upside, a steeper channel. So the monthly, the larger picture on the ES looks just fine. So my point is the bullish trend is still intact. We get under here, we'll talk about a change. Until then, the bullish trend is still intact. Traders, one more chart. Let me show you now. Very interesting. This is the CRB index. The CRB index has not come under my OMNI average for a long time, about a year and a half. It has just gotten below the OMNI average and has put in a bear flag, showing us that commodities want to move lower. And if commodities move lower, that is very good for us here in the U.S. because right now products in the store are slightly expensive. So commodities look like they want to come down. That should be buoyant for our stock market. The OMNI average, very important here on the CRB index chart. Take a look at your commodities and look at the CRB index. So traders, those are the charts. Remember this CRB index, this lets us know what the commodities are going to do. And according to this, the commodities are likely going to come off a little bit, at least in the beginning of the summer. Remember this. Weekly and monthly charts will keep you in focus with the big picture, and the big picture has a green arrow still at this point. So do not fall in love with the downside. Again, if we have to change to, let's fall in love with the downside. We certainly will. No one that I know has an opinion enough to be bullish in a bear market or bearish in a bull market. So we know that we use the charts, and if it's bearish, we go bearish. If it's bullish, we go bullish. But we do not call a one-day pullback the beginning of the end. Let it call itself if that's what's coming. So traders, once again, for you guys, gals, traders out there that were panicking today, try to keep your emotions out of this thing. Look at the long-term charts. Recognize where we're at and relax a little bit. We do have stops. A stop is your best friend, as you know. Stops absolutely helped us on Wednesday. They will help you on any day that the market does not go in the direction that you've chosen. So always use stops. Am I out of here? Are we done with this video? Am I wrapped up?
How about the seminar?
All right, we have a seminar coming live here in Vegas, August 20th. If you would like to come to the seminar and spend an entire, morning, afternoon? It's a morning seminar? Spend a morning with me. I will be live there to help teach you my techniques and to meet with you personally. Shoot us an email and we will absolutely respond to you and tell you about the dates, the times, and how to get in touch with us. Please put the email down below me and allow the OMNIX to contact me. All right, traders, I'm getting out of here. I want to go watch the markets. Remember that wheat looks like it may come off a little bit tomorrow, so keep your eyes on it. Try to keep your emotions out of trading. One of the best things you can do to help yourselves with that is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss.
We do not claim or guarantee that you will profit from the information provided.